Reason for the profit every season. What's up, M.B.U family? Today we're breaking down something that separates guessers from real traders, the difference between intrinsic value and extrinsic value in options trading. Before you scroll, listen up. This is the foundation of how your money moves. If you've ever asked, why did my call drop even though the stock went up? Or why did my put lose value overnight? This will finally make sense. Grab your notebook, tap that like button, and if you're serious about learning how to trade with confidence, join the M.B.U community. The link's in the description. Disclaimer: this video is for educational and entertainment purposes only. It's not financial advice. Every trade has risk. Always do your own research and never invest money you can't afford to lose. When you buy an option, the price you pay, called the premium, is made up of two parts: intrinsic value and extrinsic value. Think of intrinsic value as the real money, what the option is worth right now if you used it. Extrinsic value is the extra money, what people pay for the chance the stock keeps moving their way before time runs out. Here's how it works. For a call option, the intrinsic value equals the stock price minus the strike price. If the stock is at $110 and your strike is $100, that call has $10 of intrinsic value. For a put option, it's flipped. Strike price minus stock price. If the strike is 110 and the stock trades at 100, that put has $10 of intrinsic value. That's the real cash value sitting inside your option, what you'd get if you exercised it right now. Now let's talk about extrinsic value, the part most traders get confused about. Your option's total price isn't just the intrinsic part, it also includes time value. That's the extra amount traders pay because there's still time left before expiration. They're paying for possibility. If your call costs $13 and $10 is intrinsic, that leftover $3 is extrinsic. That's what disappears as time ticks away. Three things drive extrinsic value: time to expiration, volatility, and interest rates or dividends. The more time left, the higher the value. Time is literally money. The bigger the swings, the more traders are willing to pay because big moves mean big opportunity. Day traders often focus on time decay, also called theta decay. They sell premium when volatility is high and buy it back when things calm down. Swing traders buy options with strong intrinsic value because they hold up better during pullbacks or sideways moves. Scalpers play near the money contracts to catch short bursts of movement. Let's make it real. Imagine Tesla is at $210. You buy a 200 strike call for $13. That means $10 of intrinsic value and $3 of extrinsic. If Tesla climbs to 215, the call now has 15 intrinsic. Even if extrinsic drops to 2 because time passed, your total premium is 17. You're up $4. That's why knowing the split between intrinsic and extrinsic tells you exactly where your profit comes from. Here's an M.B.U mind hack to lock it in. Intrinsic value is money you already earned, sitting in your hand. Extrinsic value is money you might earn if things go your way. One is guaranteed if you exercise right now. The other is hope. And the market charges a premium for hope. Most beginners lose because they buy cheap, out-of-the-money contracts that are all extrinsic value. They're paying for time and volatility only. When time runs out, that value melts away like ice in the sun. Meanwhile, experienced traders choose in-the-money options with real intrinsic value, slower decay, stronger moves, and better odds of profit. Next time you buy a contract, check the breakdown. If you're scalping, go for more extrinsic juice. If you're swinging, lean on intrinsic strength. If you're holding long-term leaps, go deep in the money with mostly intrinsic value. That's how you can set realistic stop losses, maybe $30 per contract, because you know what you're truly risking. Disclaimer again, nothing in this video guarantees profits. This is about learning to think like a trader, not gamble like a beginner. Listen, this is what we do inside M.B.U every single day, breaking down the why behind the chart, not just the what. If you're tired of guessing and ready to really learn the game, join the M.B.U Discord. You'll get live breakdowns, real community support, and faith-based wisdom to grow in both mindset and skill. Proverbs 4:7 says, "Wisdom is the principal thing, therefore get wisdom, and with all thy getting, get understanding." Rewatch this video, take notes, and apply it to your next trade. Knowledge without action is just information, but knowledge applied becomes transformation. Like this video, share it with your team, and I'll see you inside the family. Stay focused, stay faithful, and remember, the source is the reason for the profit every season. Peace and profits, family.